Hello, everybody. March 18th, 2024. I survived 2 hours at a bar for St. Patrick's Day. Got out of there quick. 2 Guinness. That was it. All right. I hope everybody else survived and you found your pot of gold. Today, we are going to talk house cleaning first. Tomorrow, there will be an interview with Ametis CEO, Eric McAfee. He calls it Ametis, which is probably right. All right. What else? Shooter posted there's lots of weakness now into the FOMC meeting, which kind of plays into my whole the correction starts on Wednesday. On Wednesday, right after the Federal Reserve meeting, 1:30 p.m. Eastern time. In fact, I think we might be on during the meeting, which will be entertaining. So if you'd like to join in for that, I am going to be on Wolf Financial. Their stock spaces show probably 3 times, 4 times a month from here on out, trying to build a bit of a social media presence that hopefully feeds the YouTube, which feeds the subscriptions, which feeds me. All right. So Shooter says lots of weakness into the FOMC meeting. He's bearishly neutral. He wrote it differently. I changed it to that. And I think that the narrative that the traders are coming around to is the one that I've been talking about for about a month now, is that we don't see a rate cut until May, June, July, and that the market is going to get very, very sad about that, throw a temper tantrum. And I would expect that we actually get the rate cut in May in line with what I've said, which is, hey, we're going to take half a point off, but this doesn't necessarily mean a rate cutting cycle. We've already had one Fed president say it. Now they just have to do that thing where they all talk in a circle, and finally it gets to Jerome Powell and he has an idea. Some notable stocks last week. Shooter talks about eBay, silver. I've seen silver pop up in a couple spots. Take a look. MicroStrategy pointed out some insider sells. One of the reasons I lightened up on Palantir was I just think the stock got a little ahead of itself, and the market was going to soften up. And I really don't like when Peter Thiel sells $175 million worth of stock. I mean, that's more than financial planning. That's like, cashing in. US dollar index. I think that this is the important chart for the week. Starting to see some strength in the dollar. If we get mean Jerome Powell, dollar rises up, and that causes stocks to go down a little bit. All right, so today I said would be a question and answer session. So we have some questions. So I will answer them. If you have more questions, go ahead and put them in the chat in the Zoom meeting, and we will try to get to them. Probably give this about 15 minutes, and then we will move on. One of the questions had to do with, do I like iClean or do I like PBW? And I've never taken a preference. It's that they are different types of investments, and you really have to position trade these because they're not buy and hold forever investments. This is a very cyclical energy transition where at the moment, I think that oil and gas are going to do very well for a while, and then it'll shift into clean energy as costs continue to come down, as global adoption continues. You have to remember, solar is the fastest growing energy on the planet from a small number, but it's lumpy. And California, being one of the biggest economies in the world, has an outsized effect, and they really just can't get their bureaucratic regulatory selves together. So hopefully they go from being knuckleheads to being smart again. Well, they've been smart, then knuckleheads, and smart, then knuckleheads. So hopefully they're smart again. Kind of like an Elliott wave in California regulation. It's affecting everybody in clean energy, from solar to biofuels. All right, so the iShares Clean Global Energy is market cap weighted and includes some Tommy stocks. So you have to consider what you're getting here. Enphase for solar, which I think are undervalued and fairly valued, but they both have a lot of growth, are big holdings. I'm not a huge fan of Vestas Wind Systems, but it's a value right now. And then you go down the list and you take a look and you say, oh, Solar Edge is in there. And you have half the fund. Even though the fund has 130 stocks, half the fund is in the top 10 stocks with some China exposure, which probably isn't bad right now. This is why we don't have to buy Chinese stocks or a Chinese fund, is because a few of our funds have some exposure to China. this one, and the Asia 50 fund. If you take a look over at the Invesco Wilderhill Clean Energy ETF, the P used to be for power shares, you see that it is a modified equal weight index, 77 holdings, all basically between 0.5% and 2.5%. You see First Solar in here, though, only a little bit under 2% instead of over 8%. You get some exposure to Itron. Again, another reason we don't have to buy the stock. American Superconductor. Oh, who mentioned this one lately? So this is a micro cap that's about to get put on the IWM. So there are some good stocks in here, and it really has to do with the secular trend. So I think that these two funds go together pretty nice. Now, the other one that you might want to take a look at is QClean, and this is also market cap weighted. You can see it has a big hunk of Tesla and Albemarle. Now, I think that this is a value, and this is almost a value, right? We talked about Tesla on Saturday. It gets down another 100 billion in market cap. Kirk starts to think, they're probably going to make smart decisions when it comes to licensing versus building. And when they do, hey, great. So I think that this is a really nicely diversified fund, and you can add this one when we get large caps moving back up. So if we get a correction across the board in the next 6 weeks, you maybe can buy all three. All three of those are in the 401k plan that I manage, because while most people will just look here and say, well, they're all the same, I just showed you that they're not the same, and they play into different parts of the cyclical economy. All right, will the Diamondbacks win 100 games? No, that was easy. But the Brewers won't either, and I think they'll both be on the verge of wild card playoff spots. Diamondbacks will not beat the Dodgers in that division, and the Brewers, I think everybody's going to trail Cincinnati this year, just because I think they're going to be that good in the field. They need some pitching, though, as do the Cubs. Craig Counsell will be worth 5 games there, so the Cubs will be challenging. St. Louis looks a little bit better. I'm wearing the hat because not only is it spring training and I should be there, and I have decided to spend a month out in Arizona next year, but it is the best logo ever invented. I mean, this is the best logo. Look, it's a baseball glove, but it's an M and a B too. Pretty cool. All right. If Trump wins, please explain how we won't be able to deter or affect greatly the Green Revolution, how he won't be able to, pushed by Biden. So the reality is that the president only has so much power, right? Biden's agenda is supported by legislation. He didn't just wave a magical dictator wand, right? That's what Trump wants to do. Biden got 3 pieces of big legislation through Congress. Those pieces of legislation can't be undone with a magical wand. I am King Trump. No more laws. Can't really be done. Besides, if he tried, the CIA would probably shoot him. Well, no, they probably put something into his Big Mac. In any case, the power of the president to derail a lot of these things is minimal. You saw that during the Trump presidency, he wasn't able to derail a bunch of things that were legislatively law, and he won't be able to next time either. So the benefit of having passed things through Congress is that they are law, and all Trump can really do is tweak around the edges on the regulation and enforcement. Now, the oil and gas companies know that Trump wouldn't be there long, even if he won, and they're not going to just change how they deploy capital, right? They're not going to say, oh, we just put hundreds of billions over here, but Trump says for the next 4 years we can do this, so we're just going to move hundreds of billions of dollars over there, knowing that he's going to be gone and probably things go back the way they were, right? Doesn't make sense. So Trump's impact on the green energy transition is minimal. We're in the trough right now between the point where technology really makes it take off, and the technology is going to create lower pricing for batteries and for everything else. And that's really what we have to look at, and the development of supply chains in lithium and rare earth metals in North America and South America. So, this is just, Trump doesn't matter really all that much. He can tweak things, he can make a small change in the timeline by a year or two, but that's about all he can impact. He can't really do much else. You already have 20 or 30% of Republicans who won't support him. They may not vote for Biden, but they might not vote. So that gets to another question that's in here is, will Trump win? And I'd say the odds of Trump winning are far less than the first time when he did win, right? So his odds of winning just keep going down. So he squeaked out a win, even though he had 6 million fewer votes than Hillary. Then he lost to Biden with 8 million votes less than Biden. And my guess is that the women of the country are not going to let him be president again. And I can categorically tell you, because I'm in these circles, that there is a concerted effort by Democrats, and it's for different reasons, but there's a concerted effort by Democrats to soft play the polls. They're not answering the poll questions honestly, and they're doing it on purpose. So if you add in the people who are saying, no, I'm withholding my vote, I'm not sure yet, that are typically Democrats, Biden's actually ahead by 3 to 5 points. But you have a lot of people angry about this, that, or the other thing. And, whether it's his age or policy with Israel and Gaza, which he's been changing, it's a really tough road for Biden to lose. And I think that if a different Democrat runs and they put together a smart swing state ticket, because Biden says, it is time for me to be an emeritus advisor. I think the Democrats will win in a landslide then. So it's whether or not Biden wins a close one or the Democrats run 2 other people and it's a landslide. So we'll see. What is your position size for the following? AMTX is a triple position, a little less than a triple position, between double and triple. Spire, because it doubled in price, is now a double position. ASTF is a half. ASTS is a half position. Heron Therapeutics has gone up in price, so it's almost a full position. And if you haven't been following Heron Therapeutics, you ought to. I mean, if you don't have a position in Heron Therapeutics, everything that I said 2-3 years ago about that company is coming true. But again, Gartner hype cycle, people just don't have the patience for true investing. They just don't. You got half the people that put money into the S&P 500 index, and, the bubble could hit them right in the face. They could be holding the bubble themselves, and they still wouldn't sell the index until they get scared when it drops 30%, and then they sell it, and then it drops down 50%. And that's coming. That's going to happen this decade sometime. So, stock picking still wins if you are patient. Unfortunately, the average holding time for people is 10 to 12 months. Which is just a dumb holding period. Your average holding time should be 3 to 5 years. And if it's not, well, then you're not really an investor. So stop telling me that you are. Black Sky is a starter position just because its price hasn't gone up. Rocket Labs is a half position with some puts, so that's still the same. They had some expire on Friday, so I do have to update that. I probably need to sell more Rocket Lab puts, but I'm waiting because I think that the market's going to get softer. DNA was a half position, now it's a starter position. And Planet Labs same thing, was a half position, now it's a starter position. Do I see any movement in the conflict between Ukraine and Russia? I think there's only one ending for that. It's just a matter of when. Eventually, Ukraine gets the money that's sitting out there and being held, and Russia gets booted out or cuts a deal to save face, but the end game is that they're booted out. I think the solution, if Zelensky does it on his own, I think the solution is for him to finesse all sorts of aid out of the West and then cut a deal with Russia where Russia gives everything back, but gets like a zillion-year lease for the port in Crimea and gets to control the bridge and a highway. Because Putin doesn't really care about the people living on the border. He doesn't care. It's all about having his fleet, have access to the sea. So I think ultimately that's what happens. Is it this year, next year, that some resolution occurs? I don't know. How many more people have to get killed? I don't know. Putin doesn't care. There is a possibility Putin dies or is overthrown. I'm kind of surprised it hasn't happened. Maybe it happens this year. Who knows? I thought it would happen by the end of last year. But the guy scares the hell out of people, so they're careful. And the right wing in Russia, the rise of the global right wing is very reminiscent of the period before World War II. So that's concerning, and I think that we should be mindful of anybody who votes right wing doesn't have a really good outlook on history. They just really don't understand the historical significance of how violently dangerous populist nationalist right wings have been, and the far left, right? I mean, the communists on the far left. But the majority of the wars have been started by the nationalist populist right wings going back century, I mean millennia really. So that's what we have to keep an eye on. Now the big market that Ukraine impacts are wheat and fertilizer. So Ukraine is what, the third biggest producer of wheat or fourth biggest producer of wheat in the world? I think fourth, and third or fourth in fertilizer, in particular potash, which is why I have talked about Nutrien again. I think Nutrien is probably setting up for a double over the next several years. But if there's a resolution in Ukraine, then suddenly you're about a year out from them producing a lot of potash again, and you have to, manage that position. So I think Nutrien is a really good hedge on the conflict in Russia and Ukraine carrying on. All right, so that's all of those. Anything new here? Les says operating margins are lower. Well, in clean energy, yeah, kinda. It has more to do with the capex cycles and adoption. As the price of everything they do comes down, which it is in 20 and 30% hunks, year over year, and growth is up in 20 and 30% hunks, you have growth and expenses, and it's a good equation. It's just taking time. And a lot of them have a lot of tax credits kicking in the next year. So that's a big deal. I mean, that's across the board. A lot of tax credits kicking in January 1st, 2025. So, and Trump can't affect that, right? Because it's law. And that's important to understand. It's law. So, he can't really do anything but tweak some of the rules and regulations that may impact companies at the fringe. And really, he'd probably expand how the tax credits work with natural gas. So, I mean, that's just the way it is. That's probably what he would do. He has taken some personal investments, but he may have to sell them given that he's a $500 million in hock on judgments right now. All right. What is your cost basis and Heron Therapeutics? I'm profitable on that one now. I think it's 255, 265, right in there. I'd have to double check, but I'm slightly profitable on Heron Therapeutics after being down 40-50%, something like that. Yeah, all right. Have you ever looked into ARQ? What is ARQ? Does not look familiar to me. Activated carbon products, blah blah blah, granular activated carbon, blah blah blah, low ash coal waste derived particle. What are they using this for? Concrete? Oh yeah, asphalt additives. Yeah, if it's a good way to use fly ash, I mean, maybe it's got something to it, but the reality is coal is going away. So, coal is going to be an emergency fuel in the future. And the future's not that far away, 6, 7, 8 years. All right. Major market video is posted. And let's see if anybody asked anything new over in the group chat at Fundamental Trends. We are adding something called the Heartbeat API. So these will start to get updated in real time versus, I think it's every minute right now. Are you okay? I thought you didn't like model. Yeah, model portfolios are junk. But people keep asking for them, so I'm gonna model portfolios for you because you want them. Yeah, talked about the clean energy already. Let's see, anybody post macro dashes? No, just me. All right, going once, going twice. Any other questions? The stock market's overvalued at the very top, and that's starting to impact maybe some of the middle-sized large caps. Your 50 and $100 billion companies, not just your $200 billion companies and up. Oh, somebody asked about, I talk about Great Lakes real estate quite a bit, and I don't mention Chicago, and it's because Chicago is A, expensive, B, has high taxes, C, the whole high-rise office community thing is less today than it was in the past. Chicago still has literally a generation long transition to remodernizing that city. And it's going to be tough because the state of Illinois is just so much in debt. I mean, Illinois is not where I'd want to be buying. It's a tough state because of the taxes and just really they're behind the eight ball, I think, for literally probably 20 or 30 years. It's going to be a while. I like Wisconsin real estate. I like Michigan real estate. I think Michigan is dramatically overvalued. However, they have a law that second homes are taxed more than first homes. So, like, if you're a Michigan resident and have a second property, that doesn't trigger a tax penalty. But if you're a resident of a different state and then buy a second home in Michigan, you pay a higher tax rate for having to be a second home. It's an interesting law. I mean, it's not nearly as screwed up as some of the laws on property taxes in California, which property taxes on properties don't go up unless the property gets sold. And that is one of the reasons why some of the cities are having problems is you got longtime owners who are just playing out the string on these properties because, well, at these cheap tax rates, if I just let it become dilapidated and suck all the money out, right? They're just in a perpetual state of property runoff. California should change the law on property taxes. The problem is people would have to vote for it. And, you have big interests in keeping the laws the way they are. And a lot of people who don't understand how they're getting screwed. So, when people start to realize in California that they should change their property tax law to maybe, a reassessment every other year, then, until then, Los Angeles is going to have problems. San Francisco is going to have problems. All the cities are going to have problems, except where you got huge pockets of wealth. So we'll see if they're smart enough to change that law, but nobody wants to vote for, changing it because, it'll hurt me today, even though my property value is starting to go the other direction. All right. Oh, somebody says that property taxes double on a second home, even if you are a Michigan resident. Oh, yeah, but I do know that it's still higher if you're out of state. So, I mean, there might be two levels of exemptions and taxation. But for sure, if you're buying a second home in Michigan and aren't a Michigan resident, it's pretty onerous. Maybe it's the same for Michigan residents. I don't think so, though. All right. Is there any good reason for Jay Powell to be mean on Wednesday? Yeah, he wants to talk inflation down and he wants to make sure there's no stock market bubble. The problem is that the two biggest components of inflation right now are what? Does anybody know? One of them's easy. It's housing, right? Housing is over a third of the calculation and that's still expensive. So to bring the cost of housing down, you actually have to lower interest rates, which is also good for the banks. That's why it's going to happen. It's just a matter of timing. It's good for the banks. It's good for the treasury. It's good for the housing market growing again. Interest rates are going to come down. It's just a matter of how much, how fast. But he's afraid that OPEC Plus is going to jam it to us on energy going into an election. And if the dollar weakens too much between now and the election, and the price of energy goes up, that's real bad for Biden. And they don't want to see that happen. So they're on this line of, okay, how do we keep the price of gasoline from going up and stimulate housing and help the banks and help the U.S. Treasury market? Yeah, remember, tax receipts go down after April 15th, right? The last tax receipts come in the last, third to last week of April. They're all cleared by the end of April. So in May, tax receipts fall a lot. And that is when the Fed is going to probably, I think, cut rates. I think they're going to cut them in May because they know that tax receipts go down in May. And that means that they're going to need a lower cost of interest on the debt. The banks need a flatter yield curve. People want to buy houses this summer, right? If people can't buy houses this summer, they're going to be angry when they get around to vote. So, yeah, for sure we're getting a rate cut by June, but I think it's May. I really think it's May. Either way, it's happening. But like I said, he's got to navigate the inflation thing because people will, oh, inflation. Hey, we have inflation for the first time in 40 years. It's a forever threat. It's not. It's just not. There's going to be so many people that want to move to the United States in the next forever, really forever. But as climate change happens, we're not going to have any shortage of people who want to move here. We just have to figure out how to take them in. Because look how big our country is, and we only have 330 million people. We could have 1 billion people here, no sweat. And I think it probably happens in the next century, probably. because we have so much northern space. And I think Canada gets a lot of people. We're in a part of the world where, because Europe is contained for space constrained and Russia is not a place people want to go, we're going to have the better weather. So, there you go. And water truly isn't the problem once you get north. So, there's no shortage of seawater that can be desalinated too. So, I just don't see, immigration's going to have to normalize, and we're going to have to start letting millions of people in every year for a very long time. It has to do with all sorts of economic reasons. We're going to be able to pick and choose, but that doesn't help in the short term, right? In the short term, there's elections to win, there's policy to get done, try to keep the planet from completely burning up. And anybody who doesn't believe that's what's happening is just willfully ignorant. But all those things are already in motion. Trump can be a speed bump, but he can't stop anything. As an investor, you look at the big trends, and sometimes you have to hold your nose for a couple of years, but it is what it is. And traders will be traders, and investors will be bad, and half the people will index, and that's the environment that you live in. Right? You're getting some great stuff in the micro caps and small caps dirt cheap when they turn around, and they will, probably in conjunction with interest rates coming down. You make a lot of stuff will double and triple quick, really quick. And then you have to figure out what to do with that money. I could set up a GoFundMe or something if you really want to send me more money. All right. Are we done with the question? I will do one more quick check over here. Nothing appears to be new. If you have anything that is overbought and overvalued, check for overbought over at TradingView and take a look at the VSL, which, if you haven't been watching what I've been doing with a very short list, I've got the 5-year price targets almost complete everywhere. I haven't done all the mega caps, right? So some of the mega caps, I don't have 5-year targets. And I think I have 5-year targets and everything. I haven't done bottom fishing on everything. They're both, this is a pretty rigorous exercise that I've undergone since November. It's taken me since November to get these all done, and they'll change a little bit over time. But when you start to see the potential, and they light up, when the potential gain is over 100%, pay attention, do some research, and ask why. Why is that? Why can this happen? Yellow means that it's below bottom fishing or close to bottom fishing. So you take the conditional formatting. So if the price of the stock is within 10% of the bottom fishing price, it turns yellow. Now, that doesn't mean go out and buy it, just means pay attention. One of the other things that I've put in is percentage of shares traded, because people are like, why did it go up today? Why did it go down today? I want to exemplify how few shares get traded on a day-to-day basis. So when a stock it looks to you like, oh my God, half of their shares got traded today. No, it's people and machines, mainly machines, just trading it super fast, right? This is a big day. 3% of the shares actually have moved, right? There's just not a lot of shares changing hands. And that's why you have to get away from the whole idea of, well, why did it happen today? Why did it go up or down today? Because it is traders being traders. And if that's not ingrained in your head and you accept it, again, you shouldn't manage your money. That is how things work. Traders being traders. Play off of the traders. Don't try to be one unless you can really do a good job learning from Shooter and you have the 20 plus hours a week, 25 plus hours a week to do it. You shouldn't swing trade unless you're really making it a part-time job. It's just the way it is. Now, if you want to position trade, that's easier. That's a couple hours a week plus your reading. So, there's really, no other answer to why did something go up or down today than, traders being traders. And even in Marathon Digital, right? And I don't even know if it went up or down. Marathon Digital, it's down less than 1%. And actually, it just went positive. So this only updates every 20 minutes, by the way. So I don't want to use up all my data updating this nonstop. So these are 20-minute old, sometimes 30 minutes old, 20 to 30 minutes old. But again, so you have Marathon Digital. I'm looking at another screen. it's within a dime of being up or down, but 14% of the shares have traded hands. That's just traders being traders, right? They're being hyperactive. So $723 million have changed hands on that stock today. It has a market cap of 5.2 billion. And this is mainly money going back and forth, right? Oh, I'll sell it to you. No, I'll buy it from you. I'll sell it to you. I'll buy it from you. And the computer's going, right? Stop asking why things go up and down today. It's just not consequential in most cases. Go to the dividend stocks. Nothing. And I have been adding stocks. So I added VF Corp because I kind of like their brands and now they're cheap again. And I said a couple years ago they'd fall in price. So if you take a look at VF Corp, over in here, I said the price was going to fall. And everybody said, you're nuts. Well, here we are down 80%. And I'm telling you, now start taking a look at it. But it's going down. I told you to go down up here. You can't just realize it now. I'm telling you, it's probably going to go up. And they have a couple of really good brands. So take a look at what VF Corp actually sells. And they got, 3 pretty good brands that make up 90% of their business. They're going to sell off the other one. So, VF Corp suddenly is kind of interesting. And these 5-year price targets, these are a combination of me looking at me doing my own analysis. Actually, I should start this way. I take a look at the other down analysis. So I take a look at Morningstar. I take a look at Value Line. I take a look at ISS. I take a look at the composite from StarMine, which is 8 different analysts. I take a look at Bank of America that I have access to and JP Morgan. And this ends up being a composite of about 20 different analysts' outlook. And then I adjust it up or down based on, do I think it's more likely that they have positive surprises, in which case the number is towards the high end of the range, or do I think it's more likely they have negative surprises or at least don't get the positive surprises, in which case then I move it to the low end of the range. So you get a range of analysis from around 20 analysts from here to here, and I pick where in here, and I usually just pick one end or the other or right in the middle. And sometimes I add on by 50%, 25, 30, 50%. And, so these are all close. These are all really in the range that all the analysts have. And then I just pick, should it be closer to the bottom or the top? And sometimes I add on based on what I think. So these 5-year targets are pretty good numbers. And if they're off, they're not off by a lot. So when the potential gain, right, is under 20%, it actually gets a red box, turns red. If the gain is over, potential gain is over 100, it turns green. And if it's between 20 and 100, it's not highlighted at all. Now with the stocks that pay a dividend, you got to figure out, okay, does the dividend, added to the potential gain make sense? So you take a look at Chevron, can go up about 80%, but you get another 4% in income, so that's another 20, and that means you can, on a total return basis, you probably can double your money in Chevron the next 5 years. And then you better trade it well. So if you think it's a forever stock, you may have a problem. Dangerous dividend stocks. I'm going to start putting this out every month. So 3 dangerous dividend stocks to sell in March. Take a look at some screening. Sell Altria, which I originally said sell way back here. So way back in 2017, I said sell Altria. And right, the stock is down since then. Add the dividend. It's made a whopping 8.95% in 7 years. So 1% per year for Altria. Oh, but I get a big dividend, right? So a lot of the same things hold true for them. I think they have a lot of risk. I don't think there's an Armageddon scenario. I just think that it's roughly fairly valued and has like no growth. So why would you want something that's not cheap and has no growth? Archer Daniels Midland. I'd be selling it on this rally because I think that where it fell to was fair value. So I don't think it's cheap. And then Procter & Gamble's not cheap either. So, these are 3 stocks that have all rallied lately off of bottoms. And I think they're going to retest those bottoms. And I think they're going to be choppy for years. Why would you take single stock risk if they're not going to beat the index, and they're not going to? All right, one more question. Any suggestions for getting out of Grayscale Bitcoin Trust and into IBIT? Yeah, you go click, sell GBTC, click, buy IBIT. There you go, easy. Why wouldn't you save all that expense? So unless there is why scale in? If you're already in Bitcoin, just switch to a cheaper fund. Unless you think you have too much Bitcoin, which I don't even know how that could be true, right? Unless you have more than a quarter of your money in Bitcoin. And I use a quarter because I do have a quarter of my money in Bitcoin now, mainly because it went up in price so much. I don't know. I say a single digit percentage in Bitcoin because as a regulated guy, I gotta be careful about what I say. But I'm also telling you that I've got a quarter of my money in Bitcoin. Now, that means I have to be very cognizant of when to take money off the table. So again, maybe that's a big position, 25%. I think it's very likely that, because I started with 10, 12% of my money in there, very likely that I take out all the profits and most of the principal at some point. And I probably do it in 2 or 3 different selling periods, and then it has its 50% crash, which it will again someday. And then I buy it back and it goes up again to new highs. I do think ultimately this cycle, I think people are misunderestimating it, to use a famous word. They're misunderestimating. I think that the target for Bitcoin isn't in the 100,000. The target for Bitcoin is around 300,000 based on what I'm seeing. And that's, maybe pretty quick. Then you'll get a pullback into the 100,000s. I think the 100,000s isn't the upside. I think that's the correction. So way past it and then back into 100,000s. And then we'll see if it makes a run at a million. The adoption of Bitcoin is, I don't see it stopping. I think as Bitcoin becomes legal tender in certain countries and used for transactions, and I think with the oil countries starting to buy Bitcoin, you just saw Qatar do it. If you're not understanding what's happening with Bitcoin, it is becoming a global reserve currency. That's what's happening. And whether it's used only for sovereign and balance sheets primarily, and not necessarily as a medium of exchange, right, to buy your pizza, doesn't really matter. The medium of exchange thing doesn't really matter. That will come as enough people have it, say 20 years from now. But between now and the next 20 years, that's not where the big money be made is. The big money is to be made as nation states and corporations and the very wealthy adopt it as a store of value. As it becomes more and more digital gold, that's where the big money is. And if you take a look at a price chart for gold, right, it went up, then it came down to 300 over the course of a decade in the 90s, and it chopped, and then it went up, and now we're thinking 25 years later, it might go to 3,000. So in 25 years, you might get a 10 bagger on gold from 2000 to say 2025, 6, 7, somewhere in there. But, how do you feel about making a 10 bagger on your money in 25 years? Right? There's a lot of people who, but it went like this. It made a wavy line and I can trade that and blah, blah, blah. How many of you, if you had just been investing in the S&P 500 and gold on the dips, wouldn't be way better off than buying a stock and then holding it for 10 months, right? So folks who are quick triggered with their sells are the ones that lose. The stock market, the stock market, real estate markets, those are all mechanisms to transfer money from the impatient to the patient and the opportunistic. And that's why this is so important. I'm giving you these and I'm adjusting them, right? This is 20 different, give or take, analysts, and then I'm adjusting it based on just what I think. And, I'm not adjusting it a lot in most cases. I'm just picking the higher, low end of the range or in the middle, or in some of them, I add the top. I really don't put anything below the low end of the range. So I'll pick the low end of the range on a lot of these, but I don't typically go below that. Because if I want to put something below the low end of the range, I don't include it here. Then we have an actual short idea. And, I don't really have a lot of short ideas because it's time consuming and it's highly risky. All right. I don't see anything new, so we will call it a day. Have a good one. And I'm going to finish this article next, and it's going to go up on just on Seeking Alpha, and it'll also be on the free side. At least the intro will be on the free side of margin of safety investing. So I think you'll have it. I got to figure out how to use their new toys for publishing. All right. Have a good day.